There is a lot of uncertainty in the world right now, and much of it surrounds our economy. Will it recover? What should we be doing now to stay on track? Daytime's Robin Haynes checked in with financial expert Corey Sickles of Safe Harbor Retirement for some advice.
Okay, Corey, then let's talk about the current market first and foremost. As someone in the financial industry, how do you feel about what's happening right now?
Well, one of the things we look at on a daily basis is what we call the VIX. And the VIX measures really the fear in the market. And right now it's at the second highest time, or really the second highest point ever. Back in 2009 was the highest point. So one of the things you see when there's fear in the market is you're seeing that, $1,000 or not $1,000, 1,000-point swings in the Dow Jones on a daily basis. It's kind of a standard and it's a norm. So until we can actually get, I think till we actually can hit the peak of the number of cases in the coronavirus, when we start going on the, really going downhill on it, you're gonna see more volatility, in the market as well. Congress is really trying to do everything they can. They passed a $2 trillion stimulus package. The Fed has lowered rates. So from the Congress and the government standpoint, they're trying to do as much as they can to calm the market.
Right, and to kind of retain some confidence or create some confidence, which is pretty low right now. So they're kind of doing what they can on their end. I want you to talk about the market improving, because we have been through maybe similar situations. I know this is kind of an unprecedented situation, but we've been through similar. So how does that help us assure that things will get better financially?
Well, if we go back and look at, I'll mention a couple of other, pandemics that we actually experienced back in 2003 with SARS. The market dropped like about 20% in a short amount of time, but 6 months later it rebounded with a 22% recovery. And then if you go back in 2009 when we had the swine flu, now we also had a whole different economic, environment at that point in time but we saw about a 40% drop overall in the market, but it came back a year later with about a 40% gain. So we haven't experienced, something where we've locked down and we're all staying at home and things like that. We have experienced some type of pandemics in the past where you have seen the market recover.
So as you talk to your clients, how are you working to keep them up to date? We know that a lot of people are going virtual. And what are your focuses now that things have changed? Well,
communication's key. Whether I'm actually picking the phone up and calling them, and having a conference call, we're doing a lot more. We're using Zoom as well, where we're doing some video conferences. But communication's key. And one of the things that with my clients, and I hope even with a lot of other, viewers out there today too, hopefully your whole portfolio didn't experience the downturn of the market. We have a financial plan, our clients have a financial plan, and you need to remind them every once in a while that only the portion that we have invested in the market is experiencing this downturn. We have many of them that are invested in fixed indexed annuities where they haven't lost anything. We also, even last week, I talked about our buffer product, where you have some downside protection. But more than anything right now, you're just saying, you want to be able to try to keep them calm, because, we will rebound just based off past experience.
Corey, there is a risk analysis that you can do on your website, and risk tolerance is an important part of this. So what do you advise people look at then in regards to what they have at risk right now?
Yeah, I think this is the most excellent time to be able to actually look at your risk. One of the things I think has happened over the last 10 years of the bull market is we took it for granted. We were just expecting it to go up year after year after year. And what actually happened was your equities became a larger percentage of your overall portfolio. And with that, when the market downturned, you probably experienced a little bit more of a loss than you should have. So right now is the time to go back and make sure you're allocated the correct way, make sure your risk level is correct. And the easiest way to do that is if you go to our website at safeharboroh.com. It's 11 questions, takes 2 or 3 minutes, and you can really determine what your risk level is to make sure you're allocated the correct way.
And this is even a good time, you say, to get that second opinion, because if you're with an advisor and you want to see where things stand, reach out, make sure they stand where they should during this time.
It is. I mean, this is everyone's sitting at home. If you really think about it, there's a lot of hours that you're spending at home. This is a good time to be able to really take control of your financial picture. And one of the best ways to do that is to set up a video call with me, or even a conference call, where we can provide you a second opinion, review your risk analysis, review your portfolio to make sure that you're allocated the correct way.
All right. Corey Sickles with Safe Harbor at safeharboroh.com. Corey, thanks for being with us.
Thanks, Robin.